AMC stock. This video goes out to all of my long-term investors out there who might be feeling some sort of FOMO, frustration, confusion, regret, any of that. If you're a long-term investor and you really want to take this investing game seriously, but those are just kind of eating you up right now with everything that's going on, this video is for you. In this video, I want to provide you with a few ways to help you keep your mind more level-headed and a bit more FOMO-free, and also offer you perspective that could really change the way you see things and what's really going on. Because when it comes to AMC, GME, Dogecoin, altcoins, heck, even the pre-revenue EV SPACs back in 2020 that have since crashed, it's all really a mental game. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking about the mental game. This glorious stock rose over 100% at its intraday highs today as I'm recording this video. Don't know what it's doing tomorrow. And over the past 6 months, this stock is up over 1,600%. Of course, it is none other than AMC Theaters, also known as Always Mooning Company, apparently. So how do you come to terms with not being in a trade like this as a long-term investor when I know you really want to? And what is the bigger picture? So right now, here are 4, count them, 1, 2, 3, 4 mental checks to run and lessons to keep in mind to avoid and crush that FOMO and frustration. Number 1, we just gotta start clean. Try and get rid of any regret, any frustration, and really just clap it up for the people who were able to make money in a crazy trade like this. It does absolutely no good if you are spreading that negativity. It is net negative for other people you may be directing it towards, and for yourself, because you're constantly going to be thinking about it and regretting it and going over and over in your head until it might drive you into a rash decision. And of course, you always have to remember the golden rule.
Always, guys, respect the pump. No, the power of the pump always comes back to you if you respect the pump of other people.
But in all seriousness, if you make a decision that is logical and the best decision for you at that time with the facts you have, it's hard to be upset about that. So how do we make those kinds of decisions? That's a perfect segue into number 2, the second mental check and lesson we have to realize is that at the end of the day, understand everything boils down to risk reward. From Coca-Cola to your Wall Street bet stocks, everything in investing comes down to risk reward. Try picturing it this way with this sort of spectrum. Value investing at its core is about getting the lowest risk with maximizing that return. So I usually classify these as low risk bets with low to medium return potential. Growth investing, or GARP, growth at a reasonable price, is more like medium risk, medium to high reward. Wall Street bets and crazy altcoins, that is ultra high risk, ultra high reward. And yeah, okay, I understand that GME or AMC at maybe the $5 range was not necessarily super high risk because there were definitely fundamental arguments to be made at that point, but I'm talking more about after they've run up, where AMC is now sitting at like 60 something dollars. So if you're not an ultra high risk person, can you really blame yourself for not taking the trade? Those who took that high risk are now seeing the high reward, and again, we have to respect it. That said, it's also easy come, easy go. From my experience, from what I've observed, from what I've read about, oftentimes people see money come and go at the same speed, and that's just because they get used to that volatility or that entertainment factor. It's simply human nature, which brings us to the third point. Understand this, and I cannot emphasize this enough right now, you are building habits. I would make the argument that your first year of investing, which I know many people are still completing or have just recently completed, is very similar to like your formative years as a child. Your investing tendencies or styles or habits will likely reflect similar circumstances to the first year you started investing. And if you begin to nurture this habit of jumping from one get-rich-quick trade to another, it's going to develop a habit that's going to be very hard to reverse when you try and sit down and build the discipline required to hold a stock for 5-10 years in long-term investing. After all, about 90% of long-term investing is doing nothing. So in my opinion, this period right now is just as much about building good habits for long-term success as it is about making these trades versus investing. And it is very hard to put a price tag on good investing habits. Focusing on these big make or break trades will build expectations for overnight riches, extreme volatility, a gambler's mindset, mindset, always chasing that next high, and also the kind of victim mindset of us versus Wall Street. Now, is there any validity to that last part of us versus Wall Street? I'm going to talk about that in a little bit, but lastly, the fourth and final kind of mental lesson and trick right here is to remember why you got into long-term investing and why it works. Long-term investing literally allows you to leverage what Einstein called the most powerful force in the universe: compound interest. Need I remind you that if you start with $10,000, add $2,000 every year, and earn a return of about 20% per year for 21 years, you are now a millionaire. Long-term investing is not, again, about overnight riches, not to sound like a broken record, but it's about long-term compounded gains. But you can only take advantage of this to the fullest extent if you are consistent in your returns. And when I think of consistency, I think of great companies with strong fundamentals that I know will continue to appreciate in value. I think of companies that are continuing to grow their revenues and their earnings. Companies with great management in growing industries and innovative products. This is what has consistently worked for generations of millionaires and billionaires. Now, yes, we do have Dogecoin millionaires, which I can't even believe I'm saying that, but here we are in 2021 with Dogecoin millionaires, and there are probably many more millionaires minted after this Wall Street's Bets saga. But at the same time, I'm not sure you can count on an AMC gamma squeeze every year. I'm not sure you can count on Elon Musk to annually pump an altcoin. What you can count on, however, is that there's always going to be the next one. Now we get into the bigger picture where I hopefully can offer you or shift your perspective and really see the bigger picture going on right now. So take a look at this timeline with me. Kind of the second half of 2020, you've got EVs and pre-revenue SPACs all absolutely crushing it. Just incredible gains seen by everyone involved. Then in January, February of 2021, you've got the ultra-futuristic stocks like 3D printing sector and genomics leading the way, and you've also got GME, that whole craze. Then all of this comes crashing down and we see a huge correction and growth, and we see GME, AMC, all of those guys cool down. And where does the risk on money go? It goes to crypto, specifically Dogecoin and other altcoins, and you see the development of just crazy projects trying to get notoriety and clout, just coming up with a catchy name. And then it all peaks with Elon going on SNL. And later we have a crash in crypto, a crash in the crypto markets. And do you really think that it's a coincidence that now AMC and Wall Street Bets is back just a week or two after the crypto crash? These things will come and go. And again, you've got to congratulate those who can successfully play this game of musical chairs, win, and then go home happy. But one day, things may move a little too fast and you may be the one left without a chair. This is what happened to those who bought CCIV at its peak, to those who bought Dogecoin the night of SNL. And trust me, it is not the suits who are the ones buying at the top. There's a reason you see smart money and institutional money getting in very early on this graph, which maps out the typical euphoric behavior in assets. What's even crazier is if you compare this to the chart of Dogecoin over the past 3 months, I mean, it's not identical, but it's pretty similar. And I'm definitely watching to see if AMC ends up matching this chart as well. It's a long shot, but it would be pretty crazy. Many of you probably know I'm not a huge believer in blaming Wall Street or seeing us as the disadvantaged. Instead, I think you have to be really confident to succeed in investing, and I think it's a very exciting challenge, and you got to know what you're getting into when you go into the stock market. But we have to realize together that their best chance of screwing the retail trader, taking our money, being unfair, is in these big rides where everyone is trying to catch the next one. And it's always going to be moving. There's always going to be some call that you hear from your friend about how to make easy money in the next week or so. And that's how we let them win. But if we are able to do our due diligence, do our research, and get into long-term investing, buying good companies at good value, that is how you can beat Wall Street. Wall Street has a lot more power, reach, and money than many of us realize, and they can do a lot of damage in the short term. But over the long term, eventually the fundamentals at some point have to play out. And that's where we have the advantage. We have many more advantages. I suggest you read Peter Lynch's One Up on Wall Street, but that's just one of them. And again, if you're in one of these trades, this video is not meant to scare you out of it. This is not really a buy or sell AMC situation. This is more for those long-term investors who want to take this seriously and are feeling maybe frustration or FOMO. But if you are in this trade, let me drop a gem for you here. And this actually goes for everybody because it applies to a lot of different situations. It might sound kind of weird, but if you feel like a tingling when the market is closed and you're just itching for the market to open, and you've got this certain excitement and to the point where maybe you can't sleep. I've stayed up before till 1 a.m. Pacific Standard Time just to see the pre-market and what it looked like because I was so eager to see how much my account would move the next day. So this is probably a couple years ago when I was doing some pretty risky stuff with options and trading and things that were expiring within the week. And I was just fantasizing about how fat my gains would be the next morning. And I learned that that is usually a great indicator that I have way too much risk in my portfolio. Now, I am not saying that it's bad to be excited for market open. I love checking in on my stocks every day and seeing what my holdings are doing, but I'm not glued to my screen and I don't have this anxiety when I'm going to bed, like what is my portfolio going to do tomorrow? So if you have that feeling, right? And those of you who have it will know what I'm talking about, where you just know your portfolio is probably going to move a lot tomorrow and it's exciting, but you don't know what direction it's going. If you have that tingle, that sense, that is dangerous. And it probably means you are putting too much on the line or your portfolio is way too risky. So listen to yourself and take those signs. If you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check our quote of the day. You might just learn something. Honestly, I think this is one of the most fitting quotes of the days I've ever had on any video. Discipline is choosing between what you know and what you want most. And what you know is long-term investing, fundamental and valuation analysis, right? Holding long-term. What you want most is probably the quick gains. So definitely keep that in mind. If you're watching at this point in the video, you are the real MVP. Oh, don't forget to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. And also check out in the description below, we have a link to the investor community. So go ahead and check that out as well. And now, if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.